afternoon, everyone. This is Campbell McCrary from Amvest Capital live in New York City. Welcome to Amvest Capital Inc. live webinar with Skeena Resources Limited. Skeena trades on the TSX and the New York Stock Exchange as SKE. Welcome to the New York Stock Exchange. Hope you'll enjoy today's program. It will be available in on-demand replay about an hour and a half after we wrap up today. The link that you used to get in here will also work to getting you to the on-demand. And if you don't see any emails on that, you can always go to amvestcapital.com/replays, and it'll be up there in perpetuity. A few housekeeping things. This thing flashing right now, that's where you can ask a question of management. Important links and downloads, copy of this presentation and links to their web page and their stock page are there. I find this quite interesting. Share this event live or this link to the replay. It'll tee you up to pop an email to your friend or put it on LinkedIn or Twitter. At the end of the show, do please share your feedback. You can only do that once, either here or in an email, so do it at the end. With that, Amvest Capital, of course, is a New York-based specialist investment management corporate finance firm focused solely on the natural resource sector. This call is most definitely for informational purposes only, as always. Very pleased to have with us today Kelly Earl, Vice President of Communications over at Skeena, geologist, accomplished geologist herself by background, spent many years in the field, the founding member of the BC Regional Mining Alliance, and the founding Industry Advisory Board Chair of the Center for Advanced Subsurface Earth Resource Models. So, all very cool. Again, please send in your questions, and we'll try and ask them in real time. And of course, we'll have Adam Graff, our senior research analyst, as well, asking the more technical questions. Welcome to the webinar, and welcome to New York. Kelly is in our 42nd and 3rd conference room.
Thank you, Campbell. Pleasure to be here in New York. We're pretty excited about the New York Stock Exchange listing being live. So with that, I think I'm going to jump right into the presentation. As Campbell mentioned, if you have any questions, please feel free to type them in, and hopefully we'll have time to cover everything. So the focus of the presentation, of course, is going to be Eskay Creek. Skeena is revitalizing the past-producing Eskay Creek mine, located in the Golden Triangle in Tahltan Territory of Northwest British Columbia in Canada. So the obligatory forward-looking statements coming up here. Next, we'll quickly focus on the area. I know we have a lot of existing shareholders, returning listeners to my previous Amvest webinars. So this is where we are in Northwest British Columbia, an area that's had a lot of interest lately. I'm sure a lot of viewers will know about the recent acquisition or proposed acquisition of Pretium's Brucejack mine by Newcrest, and I'll get into that in a little bit. So Newcrest is coming to the area, Newmont's in the area, Hochschild has just come into the area. It's an exciting part of the world to be in, and definitely creating more value for Skeena as we have more majors coming into the area. So we have two projects in the Golden Triangle, Snip and Eskay Creek. They're both past producing mines we acquired from Barrick. Skeena owns 100% of Eskay Creek, and that's what we're looking at putting back into production. That'll be the majority of this presentation, and I'll briefly touch on Snip. Hochschild Mining has just decided to become operators of that and exercise their option for 60%, and I'll go into that briefly as well. So a little bit on the board and management team. I don't think I'm going to touch on everybody just because I've gone through this slide many a times before, but our CEO is Walter Coles. He's an investment banker by background with UBS in New York. He's been head of the company now for about 7 years. He's done an excellent job in bringing us from I'd say when I joined about 6 years ago, a $20 million market cap company to just under 900 million Canadian now. So it's been an exciting ride for Skeena so far, and still a long way to go. Most recent addition to the management team is Shane Williams. He's our Chief Operating Officer, and he's really going to bring us through to the development stage and into construction. He's a lot of experience building open pit mines in northern climates. Most recently, he was with Eldorado Gold and built what was Integra's Lamaque project. So Eldorado put that into production. So his expertise in open pit mining in the north is exactly what we need with Eskay Creek. Paul Getty is VP Explorations, done a wonderful job of delineating the 5.6 million ounces I'm about to show you. As Campbell mentioned, I'm a geologist by background, but I look after all the corporate development and communications. Justin Himmelwright, VP Sustainability, looks after all our First Nations permitting environmental, has done a spectacular job on that, and he's really a key part of the team. Board of Directors, Craig Perry, our chairman. He was one of the founders of NextGen. He's been with us for a while now. Most recent additions are Greg Beard. He was recently retired as the head of natural resources for Apollo Global Management in New York. So with our recent New York Stock Exchange listing, we're hoping Greg can help out there with some of his connections. And most recently, and I'm very excited about, is the fact that Randy Reichert has just joined our board of directors. Randy is the VP of operations for B2 Gold. He has substantial experience building mines on time and on budget. Fekola, Kupala, again, open pit experience in northern climates. So we're really excited to have him join the board. And as we continue pushing towards development and into construction and production, you're going to keep seeing new additions to the Skeena team. So with that, we'll jump right into Eskay Creek. We always like to highlight this side. When Snip and Eskay Creek were in production, they were very remote in the 90s and early 2000s. Fly in, fly out, diesel operated. And of course, the big difference now are hydroelectric facilities that are right in between Snip and Eskay. So we will be connecting to the hydroelectric facility, will be 100% green powered. It'll make Eskay Creek one of the greenest mines in the world when it goes back into production. So with the huge improvements in infrastructure, it means it changes the cutoff grade dramatically at which you can mine, which I'll get into here in a second. So again, bit of history. Highest grade gold mine in the world, that was Eskay Creek, produced at 2.5 ounces gold equivalent per ton. And it, because it was so remote and the price of gold was so much lower when it was in operation from 94 to 2008, it meant the cutoff grades were much higher. So anywhere from 15 to 30 grams per ton were the cutoff. So that meant anything below 15 grams per ton was considered waste. So Skeena thought, well, there's bound to be material left behind that was not economic when the mine was in operation. That is economic now. And we've also looked at this from an open pit perspective instead of underground. So it was an all underground mine historically. So these are the current resources. We currently have 5.6 million ounces between M&I and inferred, and it's extremely high grade at around 4 grams per ton gold equivalent. It's the current resource you can see there. Everything in gold is M&I. All the little blue patches left are inferred. We've since done infill drilling that we just wrapped up this summer. So there's about 230,000 ounces in the inferred pit, and that's that blue color that you can see there. We've in the process of converting that all over to M&I. And the reason we want to do that is to feed it into the reserve statement. So we're pushing forward with open pit to begin with only from a permitting standpoint. We currently have 3.88 million ounces gold equivalent at 4.6 grams per ton gold equivalent. So it's extremely high grade for an open pit. These are, of course, the PFS numbers. We're moving forward quickly with the full feasibility. That should be released by the end of, around the end of Q1 of next year. And you're not going to see a lot of changes from the PFS to the full feasibility. That's because we're pushing forwarding with permitting pretty aggressively, and you need to kind of put a pin in the project. So the changes, you'll see a small increase in the reserves. We're hoping that'll hit about 4 million ounces gold equivalent with the conversion of those 230,000 inferred ounces. But I suspect the size and the grade will be fairly similar to what they are right now. So a reminder of the PFS numbers. This came out in July of this year. So we are producing and shipping a gold concentrate, 10-year mine life, producing 352,000 gold equivalent ounces per year on average at 4.6 grams per ton gold equivalent. A low all-in sustaining cost of only $548 US per ounce, and of course a capex of $381 million US. Eskay Creek's an extremely robust project at $1,550 gold and $22 silver, $1.4 billion after-tax, NPV at a 5% discount, 56 after-tax IRR, 1.4-year payback. So it's a extremely robust project. And you can see that as the price of gold goes higher, Eskay Creek only gets better. But because it's so high grade for an open pit, our downside is also protected. So this is still a project that would work at $1,200 or $1,000 gold. In terms of changes that you'll see from the PFS to the feasibility, we are pushing to get the number of gold equivalent ounces over the life of mine increased, closer to 400,000 over the life of the mine. and that's by doing some tweaks to the throughput and increasing it. So I suspect the mine life will drop, not substantially, and I suspect the grade will be somewhere in the same range that it is right now. In terms of the CapEx, that will go up. There's inflation that we have to deal with, and also we are making some tweaks to the throughput. But I mean, even if it goes up, say 15%, bear in mind that that's a very modest CapEx for a mine that we're hoping will produce around 400,000 gold equivalent ounces per year. And on that note, I just wanted to show the current annual production. So you'll see that while the average is 352,000 ounces over the 10 years, it's actually very front-weighted. So for the first 5 years, we're producing more like 450,000 gold equivalent ounces. And then once we mine through that high-grade horizon and we're into a lower-grade horizon, it tails off towards the end of the mine life because it's lower grade. So as a management team, we have a lot of ways that we're looking to backfill the end of the mine life, which I'll get into. There's the material left behind in the former waste dump. There's surface exploration potential, underground exploration potential. There's a lot of ways that we feel we can backfill the end of the mine life. And we're also planning an increase to the throughput in the mill in year 6. With lower grade materials going through, we need to put more tons through the mill in order to creep that annual production up. So we're at 352,000 over the life of mine right now. We hope to get to 400,000 over the life of mine with the feasibility study, but hopefully closer to 500,000 for the first 5 years of the mine life. And then we'll look to backfill the end of the mine life with all the exploration potential I'm about to discuss. So here's an overview of the mine site. I suspect this will be very similar, if not nearly identical, when the feasibility study comes out. Just a few things I wanted to point out. One is the Albino waste facility, and then the other is the permitted tailing storage facility. So Albino waste facility is where all the waste and tailings went throughout the majority of the mine life. It was this became full in the last few years of the mine life, and then Barrick went and permitted the Tom McKay facility, which is right next to it, a much larger facility. These are what we call dead lakes, non-fish bearing lakes. They make perfect natural containment sites, and most importantly, they are fully permitted waste facilities. So for the Albino waste facility, because the cutoff grades ranged anywhere from 15 to 30 grams per ton when the mine was in operation, it meant that all that waste material is sitting in Albino. You can see the piles there. There's about 1 to 2 meters of water on top of it. And so we've drilled from on top of the ice this past winter. You can see the great grade we've run into there, 6.89 grams over 22 meters, 13 grams over 13 meters. We've only done 8 drill holes so far. We did a bit more this summer from a barge. We should have those results out shortly. So we do not yet know how many ounces are in Albino, but it's not currently included in any of our mine plans. It's exploration upside. And there's 2 million tons there, and we're currently averaging about 6 grams over 20 meters. So we're pretty excited about the ounces here that we could hopefully add to the end of the mine life. And while I'm on the topic of Albino, I wanted to address some concerns I know we've had from some of our retail shareholders lately about a statement in our financials about an individual who's trying to lay claim on the material that's in the waste facility. So we don't believe as a management team this claim has any merit. Just to put things in perspective, Albino is a fully permitted waste facility, and Skeena holds the surface mining leases. A third party who is an individual, so I'm going to repeat this, it's an individual. They are not related to Skeena. It is not someone we have done transactions with before. It is not, well, we don't believe they're a shareholder, so not anyone that we know as a management team, an individual, has decided that he believes that he has a right to the material in the Albino waste facility because he has the mineral claims below. So after all this waste material was put into Albino and after the mine was shut down, he staked the mineral claims, and that would give you access to the material below the waste facility. Again, because we have the mining leases, all the material that are in the lake belongs to Skeena. So once again, we believe that this claim has no merit, and of course, but it does need to be heard by the courts in Canada. So we don't believe it's material. We're not worried about anything. We're not in jeopardy of losing our surface mining leases or anything like that. So that will be heard, but again, the company is not worried about it, and you do have to keep things in perspective. There's a few 100,000 ounces in here that they're trying to lay claim to. We do have 5.6 million ounces of gold elsewhere on the project that are 100% definitely Skeena's. So just wanted to address those issues, but again, it's really not something that the management team is concerned about. So aside from Albino, we also have the Tom McKay storage facility, which is extremely important to the story of Eskay Creek because it is fully permitted. So it's fully permitted, it has ample capacity, it can take all the tailings and half of the waste rock that we envisioned from the PFS, and it's wonderful to have this because that's what normally takes the longest amount of time in the permitting process, and Skeena already has 2 permitted waste facilities on site at Eskay Creek. So next, I wanted to talk more about the upside potential at Eskay Creek. So I mentioned that there's many ways we want to look to fill the back end of the mine life. One could be the material from Albino, and the other could be the exploration upside. So we've drilled, say, 90,000 meters at Eskay Creek, and I'd say 95% of that has been infill drilling. We have been very focused on pushing this project forward. You need to do infill drilling to get M&I resources, which you can then convert into reserves. So that's been most of our focus, and a lot of the drilling that we did last year, it was in this northern pit expansion. So all these ounces were underground before. Because we're pushing forward with open pit only to start, we were keen to get these converted into open pit ounces. So that's a lot of where the infill drilling focused on. So now that we're done the infill drilling, all of it, including that extra 230,000 ounces that was inferred, we wrapped this up this summer and we've put those results out so far. Now we can finally focus on exploration drilling. So the Skeena team has not yet had a chance to systematically explore on Eskay Creek. And surprisingly, the deepest drill holes that were drilled historically were only 250 meters from the underground workings. Shallow ounces were cheap ounces. They were interested in the one high-grade contact mudstone horizon. Once they had mined through that, everything was below their cutoff grade, all the rhyolites, which is where the majority of our resource is. So we're very excited about the exploration potential. And the first place we're going to be looking for is other open pittable targets. So other areas like the 22 zone, which is the pit to the south, areas like this, the circle that just came up on your screen, other open pittable targets that have not been explored systematically. So the Skeena team has done geochem across the entire project, and we've prioritized all our drill targets. So first pass this year is 35,000 meters of near surface exploration. So those would be ounces that we could hopefully capture into the open pit. Once we're done with the near surface exploration, then we'll go to focus on the underground potential. So I'm sure you're all aware, we did we did infill drilling last year. And the nice thing about the nature of this deposit, it's a VMS, which just means volcanogenic massive sulfide. It represents the seafloor. So essentially what happens, you have hot fluids that came up underneath the ocean floor, and all those fluids carried the mineralization, hit the cold ocean water, you get the main exhalative event, and you get this high-grade contact mudstone horizon that I mentioned about. That's the horizon that carried the 2.5 ounce per ton material historically. The nice thing about VMS deposits is they often come in stacked sequences. So we did some infill drilling. Once we did that, we let the drill holes go deeper. And I'm sure many of our retail shareholders and listeners are aware, we tagged into a new lower mudstone horizon. So this is, again, a mudstone horizon that occurred earlier in geologic time because the seafloor moves over time. We had this spectacular hit, 314 grams over 2.21 meters. We tagged into an even lower mudstone horizon below that. So we're very excited about the underground potential. It's our second priority. So surface drilling this year to start with, then we'll move on to the underground. That'll happen probably next summer. And then one of the last areas that we're interested in drilling is the depth potential. So I've just had a purple arrow show up on the very far left side of the screen where you can see that contact mudstone horizon. So because this was never drilled off deeply, we don't yet know how deep that contact mudstone goes. We know it dips as you get to the northern part of the project, it steeply dips. So this is another area. You know, we could be doing, say, up to 800 meter drill holes, but if we could tag into that 2.5 ounce per ton material again, then it would be well worth it. So that's another option for the exploration upside and the depth potential, and hopefully an underground component in the mine to the future. So we as a team are very excited. We should start to have some of these near surface exploration drill holes out within the next couple of weeks. I can tell you the team at site is excited visually, but we'll have to see what the assay results hold. So stay tuned for exploration results within the next coming weeks. So I wanted to draw attention to a recent transaction that I'm sure most people are aware of. This would be the Newcrest's desired acquisition of Pretium and the Brucejack mine. So for those of you who are unaware, it's only about 60 kilometers to the south of us. And when we were reviewing this transaction, we noticed some surprising similarities. So all these information is pulled from Newcrest's presentation when they announced this deal. So Eskay Creek's open pit, Brucejack is underground. You can see processing tonnage. They're much higher, 7,900 tons per day. We're at 38. They're producing underground, and we're producing open pit. So, but interestingly, the reserve sizes are about the same, right around 4 million ounces reserve size. They're at about around 8.5 grams for an underground. We're around 4.5 grams from an open pit. Average annual production, very similar, right around 350,000 ounces a year. You can see the all-in sustaining cost is very different. They're at a 981 US dollars per ounce, and we're at 548. And that's, of course, the difference between underground and open pit. And then, of course, you can see the valuation. Skeena is just under a $900 million market cap, and the Brucejack transaction is valued at $3.5 billion. So, of course, the difference being they're in production, we are not yet in production, but we see a very clear pathway to production. And even with the modest CapEx added to this, you can see that we still feel there's a substantial amount of upside left in Eskay Creek. And this is not factoring in any of the exploration upside that I just mentioned. So for those of you who say that you think you may have missed the train on Skeena, I'd say we disagree. There's a lot of upside. We've de-risked the project substantially over the last year, and the exploration upside is I mean, there's nothing but blue sky as far as we're concerned. So I hope that helps put things into perspective and maybe gives everyone an idea of perhaps the valuation that Skeena could get to in the near future. So the next thing I wanted to talk about is the carbon dioxide emissions from Eskay Creek. So not only is it going to be one of the highest grade open pit mines in the world, it's also going to be one of the greenest. So you can see the average here for an open pit produces 0.73 tons of carbon dioxide equivalent per ounce of gold equivalent produced. An underground mine produces 0.36 tons, and Eskay Creek's all the way at 0.18 tons of carbon dioxide equivalent per ounce of gold equivalent produced. So this is, of course, because we're connecting to hydroelectric facilities and we're high grade, but Skeena is actually, as a team, looking at improving upon this. We're looking at some more tweaks we can make before the feasibility study comes out, including the electrification of the fleet. Right now in the PFS, everything is still diesel powered. So we want to improve upon this. We want to do better. And that's one of our goals for the feasibility study. So next I'll jump into the timeline. We officially launched the environmental assessment process for permitting and our impact benefit agreement negotiations in the summer of this year. So those are both well underway. Again, PFS came out in the summer. We've started all our exploration drilling. I'd say the next major milestone will be exploration results that come out within the next month and into the new year. The other big piece that we're excited about is what we're calling this process permitting charter. I've mentioned it before. It's the first of a kind document that's being agreed upon by the government of British Columbia, the Tahltan, and Skeena. And it lays out an entire process to permitting. So we don't suspect we'll have our full environmental certificate until 2023, but we want to know every step along the way, what permits we'll get and when we will have them, and what needs to go through the full permitting process and what does not, because of course we're a brownfield site. So we have some existing permits, which have allowed us to, for example, already build the construction camp. So we have the ability to house 220 people at camp already. We started the tree felling over top of the open pit. That started this fall because we hope to start the pre-strip next summer. So there's a lot of things that we can do with our existing permits. And this process permitting charter is going to lay out a timeline that everyone's going to agree to. There's 7 groups involved: Ministry of Mines, Ministry of Transportation, Ministry of the Environment, Tahltan, Skeena. We want to get everybody on the same page so that we can all push forward with permitting on a timeline and hopefully get into production as quickly as possible. So that's going to come out in January, we're hopeful. And then the next after that will be the full feasibility study, which should be out at the end of Q1 or right at the beginning of Q2. That, of course, will launch off project financing. So to be honest, we've already started the project financing discussions. We've got a number of groups who've started due diligence. We hope to announce a project financing package probably in the summer of next year. A complete package. It would be a combination of debt and equity. We've already started discussions on that. And then some construction, more construction, should say, since we've already started some this past summer. More construction will start next summer. And we're looking for 3 summers worth of construction and hopefully being in production by the end of 2024, beginning of 2025. So it's an aggressive timeline. We have lots of exciting news coming out over the next 18 months. And I think it will be a transformative year for Skeena. So the other thing I wanted to touch on is our SNP project. This is probably new since I had my last webinar, is that Hochschild, they had an option to acquire 60% of the SNP project. They have decided to exercise and become operators and start their spend to earn 60%. So I should caveat that it's not an earn-in, it's an all or nothing. So Hochschild needs to spend $100 million and then they will earn 60% of SNP. So it's a small resource right now, 646,000 ounces. They would get 60% of that. Skeena would maintain the other 40%. There's also an anti-dilution clause for another 150 or for 15 million. So they would have to essentially Skeena is carried for $115 million on the SNP project. We don't feel we really get any value for SNP right now, so this is helping to unlock some value at SNP. Skeena is carried. Hochschild will be taking over exploration, and hopefully there's many more ounces to be found there. And then we're partnered with one of the best underground miners in the world on SNP. So I've talked about the tall tan many times. I thought I'd go into this relationship in a bit more depth. We're proud to be in tall tan territory. There are partners on the project. They've made a $5 million equity investment into Skeena earlier this year. It's the first time they've ever done that. They're looking to become owners of the projects that are being developed in their territory. So we suggested that an investment in Skeena would be a good place to start. Skeena is also a founder of the British Columbia Regional Mining Alliance, the first of its kind partnership between industry, First Nations, and the British Columbia government. So we've worked extremely hard on our government and First Nations relations, and I think the culmination of that is this process permitting charter that I was talking about, which will also be the first of its kind. So we look forward to continuing to build on our strong relationship with the tall tan as we move Eskay Creek towards production. And then finally, our capital performance, about 63 million shares outstanding. Our market cap is a little bit less than that right now, probably closer to about 850 million Canadian. We've had a good year, share price rise, but we feel we have a long way to go in terms of valuation. We're very excited about the New York Stock Exchange listing. Had some questions from investors about why we have the New York Stock Exchange listing, and marketing today in New York with Katie, my investor relations manager. It's become very clear to us how much value there is in this New York Stock Exchange listing. There's a lot of investors that have difficulty accessing TSX listed companies. There's a lot of institutional funds that won't access or won't even touch TSX listed companies. We really feel that this is going to open up a whole new audience to us of retail and institutional investors and should help increase liquidity as well. So it's brand new. We don't have much volume yet, but we've got plans as a team to really increase that over the next year and hopefully unlock some more value for our current Skeena shareholders. Cash, we've got about 35 million on hand right now. So we're well cashed up. And I think I'm going to leave it at that. So Campbell and Amvest team, I'm going to pass it off to you guys.
Excellent.
See if you have, dive into questions.
Yes. So in our walkabout today, you alluded to you dipping your toe in the water with some of the financing meetings of the investment banks and all that, and had a few exploratory chats with people when you were in London last week. Just tell about what you're generally hearing. What's the climate for a project like this?
So I can tell you there's a lot of interest. We've had most groups you could think of that do project financing come knocking at our door. This is a past producing asset with First Nation support in a safe jurisdiction with a low capex, with an extremely fast payback on capital. So there has been a substantial amount of interest. We have, I think, 12 or so groups doing due diligence across the board, and that's Skeena doing due diligence as well to make sure that we get the best deal, lowest cost of capital for our shareholders. We have everybody doing due diligence now so that when the feasibility study comes out in Q1, we can quickly turn around and make a decision on project financing. I suspect it'll be pretty heavily debt oriented. Not sure the number yet, maybe somewhere from 70 to 80-ish% debt, and the rest would be equity or, perhaps a stream, perhaps a royalty. I know I'm going to get flack for saying that. This is not a promise that we're doing a stream or royalty. This is us doing our due diligence and looking at every offer that comes in front of us to make sure that we get the absolute best deal for our shareholders when we finance Eskay Creek. So yes, discussions have started and they're going very well. Excellent.
Just touch snip for a bit.
Sure.
Hochschild, we read about some funny headlines, Peru and South America are not looking so shiny. Do you think that's been part of Hochschild's motivation to land in British Columbia?
Yeah, so they've always liked this asset. They've always really liked snip from the first time we met them. I think the first thing I was told by Hochschild was, you had me at hello, because they like high-grade, narrow vein underground mining. That's their forte. So a bit of a no-brainer that they'd be interested in snip. That's exactly what this is. I guess perhaps we were surprised that they would come in just because we've spent quite a bit of money there. There's $100 million they have to spend. But that being said, if they can do that and unlock the value and do some more exploration drilling and find more ounces, then that's great for Skeena, right? We're carried for $100 million. We'd have 40% of the asset. And we'd be happy to have, very knowledgeable underground miners as the operators at that project.
At one point in time, will Skeena start to look closer at the underground mining potential? At Skeena?
At snip or at
Eskay Creek?
Oh, yes, definitely. So I think I laid that out pretty well in my presentation. Top priority is open pit ounces. We're permitting with open pit to start with. So the 35,000 meters we're doing this year, all open pitable ounces is what we're looking for. Then we will focus on the underground. So there's not enough hours in the day or money to drill everything all at once, right?
So
we have to do things systematically.
Right.
It'll be next year. We will shift focus to underground exploration potential next year, most definitely.
What is the status of the metallurgical test work?
Sure. So I think we pretty concretely answered this question after the PEA and then into the full feasibility study. We're producing a 45 gram per ton gold con with silver credits, 600 to 800 grams per ton silver on top of it. It's an extremely desirable gold con. We've received term sheets from 15 groups around the world, Asia, North America, Europe. It's absolutely a saleable concentrate. We have not signed any of the term sheets yet because as you get closer to production and when you can actually send physical samples, the terms will actually get better. So we've just sent off 10 kilogram samples to a number of groups around the world to help improve those terms. So I suspect you'll see a slight improvement in terms for the feasibility study even. So it's absolutely a saleable concentrate, and we look forward to improving upon the terms.
Okay. Any exploration targets between the 21 zone and 22 zone connect the known pits? Any historical drilling? Just for the benefit of other people, to which is he referring?
Sure. So there's a bit of a gap between where the main open pit ends and the satellite pit, the 22 zone, begins. And yes, there has been drilling in that area. There's no magical other pits or high-grade material that's in there. The contact mudstone horizon has actually eroded away. So the underground mine workings end where that contact mudstone horizon eroded away. So that area has been pretty well drilled off. The lateral extent of it, maybe not so much. So more regional scale has not been drilled off so much. So we are looking at that. But I think one of our top priorities in terms of open pit potential is south of the 22 zone. So that circle I had up on the long section, that area has not been drilled. And as I was talking about the lower mudstone horizons that we've come into, the whole deposit shallows and comes up towards the surface at the 22 zones. So that lower mudstone is an underground target below the 21 zone pit, but it actually comes closer to surface by the 22 zone pit. So the lower mudstone horizons are actually open pittable targets as you move towards the 22 zone. So that's a top priority, and you'll see some exploration results out of that area, hopefully within the next few weeks.
Excellent. I'm going to pass it over to Adam Graff, our mining analyst, and starting to look at Skeena a bit. So, Adam, from the other room, what's your thoughts?
Hi, Adam.
Hi, Kelly. Great job. Thank you, Campbell. I guess you've covered a lot of my questions. One thing that comes to mind, I know that a number of the other players in the Golden Triangle area have multiple First Nations that they're dealing with that lay claim to the areas that they're operating. And you spoke about the Tahltan. Maybe you could give us some indications, if you have had relationships developing with the other First Nations, or if any of them have also claimed rights to that area that you're working.
Sure. So there is another group in the area called the Skikum-Laha. They're a very small group, informal, and they are very interested in jobs. So we have agreements with them on jobs at the mine site. They're working on the mine site right now. They have no formal claim on ownership, and they don't have not asked for an impact benefits agreement. So it's really just jobs they're looking for. It's a very small informal group. So we're working with the Skikum-Laha. And then there's also the Nisga'a Nation, which is to the south of our project. But we would be going through their roads in order to drive the concentrate out to the Port of Stewart. So we will have to come up with some road use agreements with the Nisga'a. But in terms of impact benefits agreements, it's just the Tahltan that we'll be working with. So we are very fortunate in that front, especially because the Tahltan is such a sophisticated First Nations group who's done many an impact benefit agreements before.
Excellent. Changing the topic, can you talk a little bit about your outstanding warrants and options and how you see them being exercised going forward at your current share price?
Sure. So the only warrants outstanding belong to Barrick, and they got that as part of our, when we acquired 100%, they had a back and right that was extinguished. So they have shares and warrants in the company. They're just below a 10% shareholder right now. So they have warrants. You'll have to excuse me. I'm just looking up the exact number here, 2.8 million warrants, and they're at a strike price of $10.08 Canadian. So they're very much in the money. They expire in October of next year. And that would actually bring in $30 million. So I suspect that they will exercise their warrants. They've been a good shareholder. They've never sold a single share. So that's on the warrant side. We do have a substantial number of options outstanding, 5.3 million options, and they vary in exercise price from $1.64. From $1.64 up to $10.08. Sorry, I'm getting my numbers mixed up. The Barrick warrants are at $10.80. My apologies. That's 2.8 million, and that would bring in $30 million. In terms of options, we have 5.3 million options outstanding that range from $1.64 to $10.08. So yes, those are all in the money as well. So I know management team has exercised options over the last while. I've exercised options, but I've also held the shares. So management and board has come about an 8% shareholder of the company now. So we are option holders, but we believe that the price of Skeena is going to go substantially higher than it is now. So I don't suspect a cash in and sell off of those options anytime soon. And then the final piece of the puzzle is the Tahltan investment rights. So those, I guess, behave like options in that they have a 3-year vesting period. And the reason we did things that way, we've already received the $5 million. It was done at $12.52. The reason they vest over a 3-year period was we asked the Tahltan if they would do that to show that they're long-term shareholders of Skeena. If we just sold them shares in the company, they could sell at any time. But the way we have them vest shows to us that they want to be partners. They want to see Eskay Creek move forward. So that is everything on the capital structure. I hope that answered your question.
Yes, thank you. And maybe a bit more of a generic question. I was a little confused on the BC mining tax. I believe it is a 2%, but there's a consideration there of there's some other consideration of the tax that you'd be paying. Is that a post-tax BC tax? I'm a little confused.
Yeah, so the BC minerals tax, we pay, I think we're in about a 40% tax rate to the government overall. And out of that comes the BC's minerals tax. So in terms of actual amounts, so we pay $1.1 billion over the life of mine and taxes. And then 413 million of that is federal income tax, 330 million is provincial, and 403 million of that is the BC's minerals tax. So it's all lumped in together in tax that we pay off the top. And it's out of that BC minerals tax that a percentage of that will go to the Tahltan Nation.
Oh, okay. That's interesting. Yeah, I mean, the BC mineral tax looks like it's at it's a 2% of net of operating profit, but it's a little confusing
I'm
of what
sorry,
they think of
I don't know the percentage. I just know the dollar amount that we pay in the PFS, but I'm not familiar with the actual percentage off the top of my head.
Sure. Very good. I know there's some more questions from the audience, so let me throw it back to Campbell to look through those questions and ask a few of those.
So I'm going to sort of combine a few. How long will the $35 million in cash that you have last? What is your burn rate? Forecasted exploration expenditures per quarter?
Sure. So
paint a little picture.
Yeah, so the 35 million could take us through to the project financing that we announced. I suspect we'll probably do a flow-through financing before then so that we can push hard with exploration drilling next year. In terms of an exact budget for exploration spend, I do not have one yet. And the reason is it's results dependent. So we're in the middle of the 35,000 meters of exploration drilling right now. If all things go well, then we could do infill drilling next year. We could follow up on targets. So I do not have an exact amount for our exploration spend for next year, as it will be results dependent. I think that answers the questions. Yeah, so we're financed through to the big raise, which we plan to do next June, July, but I suspect a flow through financing before that to push hard with exploration drilling.
Okay. Early stage exploration, do you anticipate continuing to do that even as, let's say, you're moving into construction decision and you're in construction and moving towards production? Would you ever stop that, or is that always going to be a part of your profile?
Yeah, so I wouldn't really call it early stage exploration. I would call it brownfields exploration. So we already have, the lower mudstone horizons, we've already tagged into them. So we already know there's horizons with high-grade material at Eskay Creek. So I would call it brownfields exploration. And as I just mentioned, it will be results-driven. So, but because first showings are that the exploration drilling is going well and we have so many underground targets that we want to follow up on next year, I suspect we will carry on with some form of exploration drilling for at least the next 18 months.
Environmental liabilities, considering past producing and older tailing status. What did Barrick leave you with?
Yeah, so we've posted a bond, a standard bond, environmental bond. The nice thing about a brownfield site is it's been continuously monitored. So Eskay Creek has been monitored from a water standpoint, the outflow from the tailings facility, every quarter for the last, 30 years. It used to be even more so. So we are not worried about any environmental liabilities left. It's non-acid generating. There's a seasonal pH change related to the water coming out from the tailing storage facility, but everything's been stored subaqueously, continuous monitored. There's never been any problems. And to give you an example, in our original PEA, we had all the PAG, which is potentially acid generating waste rock, being stored above ground at Eskay Creek. And after discussions with the Tahltan, they asked if we'd put the PAG into the Tom McKay storage facility and just keep the NAG, the non-acid generating on site. And they were comfortable with that method because they know that the tailings being stored subaqueously, there's no remobilization of any of the deleterious elements. It's a very safe way to store the material that's coming out of Eskay Creek. So we don't have any particular environmental concerns. And again, this is because it's a brownfield site that's been continuously monitored since closure.
Okay. It's it's a year-round mine as envisioned. Can you just reconfirm that?
Yeah. I mean, most definitely. We have road access. We had 200 people at camp over last winter drilling. So yes, we have road access. We're planning on operating, all year round. I think operating in the winter there last year.
Production all year round. Yeah.
Oh yeah,
it will be
of course.
In production all
we
year.
will be all year round. We're planning on doing a 3-month stockpile of ore beside the mill, just in case we get a snowstorm or a time that we can't, a day or two or a week even, we'll do a stockpile. But yeah, it's definitely going to be a year-round operation, which is exactly what it was historically.
Someone asked about snow in the open pit in the winter. Can you maybe tell everyone what you told me this morning?
Yeah, so my COO likes to say, moving snow is like moving dirt. So we have a team, a 24-hour snow removal crew. It's factored into the PFS. We have experience with this. Like I said, we operated last year, year-round. We've taken it into account. It'll be in the feasibility study. We're not particularly worried about the amount of snow that we get. I mentioned we're looking at stockpiling some material so that if we ever had an issue, we would still have feed for the mill, so we would still be, producing concentrate.
Okay. Did the Taltan own any other shares of other companies, let's say, besides in mining and non-mining? What is the investment?
So, to my knowledge, Skeena is the first mining company that they've invested in. Interestingly, they are part owners in the hydroelectric facilities that Skeena will be connecting to. So yes, they're business savvy and they're looking at getting more involved in the projects being built in their territory. So part owners of the hydro facility, part owners of Skeena. Those are the only two that I can think of off the top of my head. But yeah, I know they're looking to get more involved as more projects are being built. Oh, and they also own, they've always had a Taltan National Development Corp, which of course is the ones that would build the roads, fix bridges. It's the construction leg of the Taltan. And we have agreements in place with them. And that's another way that they're involved in projects in the area.
Back to that snow. Does the snow removal expenses show? Are they included? What line are they in the?
I don't know the line number off the top of my head in the 400-page PFS document, but they are absolutely included in there. Yes.
Okay. Again, just specifically fourth quarter 2021. So now exploration expenditures. Is there an exact number for now?
No, I'm sorry, I can't. Again, it's kind of results and weather and everything dependent. So we're smack in the middle of that. I think we're about a third of the way through that 35,000 meters, but I suspect we might not finish that all this year. It might bleed over into Q1 of next year.
Will your open pit include all the old shafts and drifts of Eskay Creek?
Correct. So everything was paste backfilled with river gravel, so it's actually a solid mass. And yes, we will be mining everything out. Yes.
All right. Thank you. Adam has another question, and then we'll close.
I guess, thanks, Campbell. Just a couple of quick questions about the potential resource at Albino Lake. So far with your drilling, what has been the average grade, and have you done preliminary metallurgy, and what would you expect that metallurgy to show, given what you know about the historic mine?
Sure. So right now we're averaging about 6 to 7 grams over, say, 18 to 20 meters. There's about 2 million tons of waste rock there. We have not done any of the preliminary metallurgy yet, but that is on the to-do list. So it's pretty early days still at Albino. So first indications are good, but you are correct. We've got a lot of work left to do and studies to do to see the recoveries, et cetera, that we would get by putting that material through the mill.
And similarly, are there any waste stockpiles at Snip that you could potentially truck over and run through your mill?
No, there are not, to my knowledge, any waste stockpiles. I mean, there's a tailings impoundment, but to be honest, that's never something that's come up. But I don't believe like there's no dry stacks tailings or anything like that at Snip. It's all subaqueously again, but that is a good question. There could be some grade in that material as well.
Has Hochschild looked to drill that material?
So Hochschild just became the operators at the beginning of October. So we're still in the process. They are the operators, so there's quite a process involved transferring permits over. It's considered a past producing mine, so there's the mining permit, there's an environmental bond. So no, we're still in the process of transferring everything over to Hochschild. So I suspect you'll see drill permits and things and drilling starting with Hochschild probably next spring, summer.
Okay, let me throw it back to Campbell.
Sure. Not a bad question. So I'm going to take one more question from the audience.
Sure.
Are there voids at all at Eskay Creek? All stopes in development have been filled completely?
Correct. So the ground conditions at Eskay Creek were not great as an underground. That contact mudstone horizons, clay minerals, it's not a very competent rock. So as they were mining, they were paste backfilling everything with river gravel. So it is a solid mass underground there. And that has been confirmed with drilling that we've done through the old mine working since we acquired the project.
All right, great, thank you. With that, we'll move to close. Again, the replay will be available in about an hour or two after we wrap up. Please give it time to process. All the same links if you like it. Please post it and spread the word. Again, important links and downloads here. Grab a copy of this presentation, but it's roughly the same as the one on your website, I would think. And Kelly, why don't you close us and just kind of recap the next 6, 12, 18 months, the catalysts. And
Sure.
I'm going to write them down. Go ahead.
So the next major catalyst is the exploration results. So those near surface drill holes looking for open pitable targets, those will start to come out in December and through to the new year. And I can tell you our technical team's pretty excited because it's the first time the geologists have gotten to do exploration as opposed to just infill drilling. So that's the next major catalyst. Then I suspect it'll be this process permitting charter. The timeline to permitting, that should hopefully be out in January. Then after that, the feasibility study, that should be out, say, March, April timeframe. We should have the impact benefits agreement with our Taltam partners out in that same timeframe. So normally you don't start impact benefit agreement discussions until you have a feasibility study. We started at the PFS stage, so that IBA should be out in a March, April timeframe as well. And then after that, it's the project financing, that discussion announcement. So I suspect we'll put an entire package together that shows deck, equity, everything all at once. And that'll be quickly after the PFS or the full feasibility study comes out. So I suspect that'll be sometime in the summer of next year. And then we'll launch into more construction at Eskay Creek and jump into a deeper exploration drilling next summer. So definitely a very exciting year coming up for Skeena.
Excellent. Thank you very much. Thank you all for attending and for following Skeena and the webinars. Good night, everyone.
Good night.